Hello everyone, this is Danish. Today we are going to talk about S&P 500 and Nasdaq, where I'm seeing the market is heading in next few weeks in a month, and what are my planning for that, and how I can take advantage of those situation if it's going up or if it's going down. What are some expected returns that I'm seeing in the stock market specifically, as long as Bitcoin and Ethereum as well. I noticed that many of us also have, these days Bitcoin, Ethereum excitement. So I thought that maybe I will just put in for the technical perspective, do some technical analysis on that as well. Having said that, I will first talk about the fundamentals, where I'm seeing the market is heading, and what are the few reasons that I made this video. So first of all, what I see is that the last couple of weeks that S&P 500, Nasdaq, basically stock market is actually trending lower, and so is Bitcoin and Ethereum as well. The reason behind it is because that many people talking about that the bonds interest rate is starting to go higher. That's why the stock market is going down. That is the reason, but not also the reason. The bond interest rate goes high because there is not much buying going on bonds itself. So there's a quantitative easing going on since we had, the pandemic last year. Fed and the government provided a lot of liquidity. So we were provided liquidity in three different ways. One is in a stimulus, way. The another one was the interest rates were dropped down significantly, almost to zero. And then the third one was the Fed is starting to buy the junk bonds and the corporation bonds and junk bonds. So what happened right now recently, that the Fed has still said that they will be keeping the interest rate low for quite some time. If we are still seeing that the stimulus is still coming in for 1.9 trillion dollars. So House has just passed it this Friday and Saturday. So and then it's going to Senate, so which probably going to be approved now that the Democrats have the majority in Senate as well. They will just approve it anyway, and there are some Republicans approving it as well in the House. So I don't think they would have any issue. So that those two things are already there. But what Fed did this last 2 weeks, they did not buy any of the bonds, which made the bonds to start going, the bond price to go down, and then start interest starting to go up. So what happened that, what it does is that the people started to move money from stock market and get into a dollar. The reason for that is they want to get into a bond when bond hits to that significant price of 1.75 or 2% of interest, when it's starting to give that. So that is where I'm seeing that the market is starting to go down, and seeing that maybe in next 6 months to a 9 months perspective, there might be a chance, because we know that this might be the last stimulus that most of the people getting it. So after that, there might not be any stimulus, because now we are seeing that the stock market, that everything is starting to open up, and jobs going to start. I'm also hearing that many companies starting to ask people to start coming into the office, because there is a now that we have vaccine available, right? So they will say that everyone has to get the vaccine, and they start coming into the office. Travel is also going higher. So so the stock market was pumped up, unreason. I mean, pumped up because of a lot of liquidity was provided. Now the liquidity crunch is about to happen. What it means, like, if the Fed is not buying the bonds, that if they were since they were buying it, there was no point being in the bonds, because the bonds were not giving enough interest rate. So that was not a good time to be risk off. Now that the stock market has gone high significantly, it's better to be in risk off, which is bonds, than being in the stock market. So what happening right now is that the money is starting to flow into the bond, but they're going into the dollar right now, and then the money will start going into the bond in some time soon, and that's where we'll see that everything trickle down, and the stock market will go down 5-7% from here, or maybe 10%, or even lower. I don't know. I mean, nobody knows 100% how low it can go, but I'm seeing that if you notice. Last year, when the market dropped significantly in the month of March, what happened is that a lot of investors jumped right in and start buying it, we saw that the case were keep going higher and higher and higher, and everyone was mind-boggling why the stock market is keep going up when when the cases are rising. The reason was everything was already priced in. All the bad news were priced in when we had a crash in the month of March and April, and then investors starting to jump right in because they thought that all the news is already baked in. Stocks are significantly cheap. Let's get right in. What's happening right now? Market, when it's starting to shift gears, it gives you a sign. What sign I'm seeing right now? What I see right now, at least, that great companies like Apple, Amazon, Salesforce, Netflix, Facebook, and all these corporations are giving stellar earnings. It's just I'm giving a few names: AMD, Nvidia. You just name it. There are many organizations giving stellar earnings, and they're getting beat up. They're getting beat up. The reason is everything is already priced in. Everything has priced in. So investors don't care. They're just going to sell off before the earning comes in to hand it over to people like me and you, the retail investors. So we have to be very careful moving forward when we're investing. You know that maybe it's time to be take a foot back, step back a little, and watch where we're investing, not getting into highly speculative and the growth stocks right now, and maybe moving into some of those utility stocks and those recovery stocks to keep ourselves safe. Like that's what I'm doing. I'm also getting cash heavy. Like I will always say that be 30% when the market goes exponentially high, be 30% in cash. The reason is because there would be rug pull. That's what you might have heard it too. That's what I'm calling, because many people think buy the dip, buy the dip, buy. That's not the dip you want to buy. Just to be very careful. So I'm seeing that that might be that what are some opportunity people are seeing right now. They are actually not the opportunities. But having said that, if you're a long-term investor, you don't have to worry about. I'm long-term investor. I'm buying slowly to good companies. I know that there is still going to be retracement for 5-10%. I'll continue to add position in that. Having C500 SPX and see where it's heading for the weekly perspective. So on weekly, you can see that 12 EMA was very well respected right here, which is a good sign. We very well respected 50 moving average on 3808. So if I am starting to cut down my position, I will just watch for it to not close below right here 3750, right below this sign. If it closes below this moving average, we might be heading down to 37 or 3600. So next support would be somewhere around this line, that I believe 3700, and then a major support would be somewhere around that. Somewhere right around here. So you want to watch for these two levels to see that maybe this is where you want to start taking positions in the S&P 500 if you are doing the index one. Nasdaq, let's check out Nasdaq on daily chart. Nasdaq, as you can see, it has broken below 50 moving average. So if I look at it 100 moving average, let's see where the 100 moving average is for this one, and see if it's yeah. So what I'm seeing right here, as you can see, 100 is right about 12,500. So that is where it might be heading for at least short-term period. And if you look up in a long-term perspective, the previous drop that it was very well supported right here on the 100 moving average. So it might be that we're heading right around 1200 for 12,500. If not, then you might be heading to this trend line. There was a long-term trend line for this one, if you can look at it somewhere here, which is around 11,900 level. So yeah, so keep watching there. What I'm also seeing is there is also inverted, there is also a head and shoulder pattern. Seems like if it breaks below right here at 12,600, 700, I think that this whole line that we are seeing right here, the difference will be covered right here. So you can see that it's very well aligning with this trend line. So be very watchful. If we don't held right here at 12,500, we are definitely going down to 11,000, 11,500, 900 range. So yeah, watch that as well. But I believe just wanted to let you know what I believe that Monday Tuesday you might have right pull back a little bit and then goes back down. So be very cautious. Again, you can also see that there is a dead cross in making on 21 not the 21 12 moving average. Let me change it to 21. And if you can see that if we don't go above 13,200 range and start moving higher, there is a possibility of dead cross, and that can definitely will take it down to this level. That's for sure. So watch for that. I'm not trying to scare. I'm just saying that I'm not taking out my positions right now. I will watch for next 2 days, 1 or 2 days. If we go higher and stay above 13,200 range, then I think it's all over. The market is going to continue to go up. Again, the stimulus is about to be given away, given, so that can play a great role for market to start going up. So watch for that as well. So let's jump right into Bitcoin. Everyone loves Bitcoin these days, so let's talk about it. Yeah, so Bitcoin actually have closed making a bullish hammer, and actually is right now giving a green candle. What I'm noticing, if it closes above 47,200 level tomorrow, I think then we have a reversal in play. But be very watchful. I think it's going to be range bound somewhere around here for next few days. If it's range bound, that's also a very good advantage. I mean, very good thing to do, because right now it has respected 50 moving average for quite some time. So if it does that, 50 moving average will come into play next 2-3 days right around here, 43,000, 4,400 range. But having said that, it was very well respected for the 3,760 right there when when the stock or any currency make a doji or hammer kind of a pattern on zero point 0.5 Fibonacci or zero point 0.6 Fibonacci or any support. Actually, it's kind of a sign of a reversal. So it might be a sign of a reversal right here, but you have to watch the next day candle before getting in. Some investor might have already gotten right here and it took a 0.5% stop loss. Let's get on to Ethereum. So in Ethereum, the same pattern we have seen. It got very well support. It got us very good support right where the previous resistance were, and you can see that the hammer was, the bullish hammer candle came into play. And then if you look at it, there is a green candle in the making right now. So if we go above right here, then I think the pattern might shift. What I'm seeing right now, if you look at the 4-hour chart, that it is actually about to break above this trend line, and it's got a support right here. So in a 4-hour chart, if we go up right here, we will see some sort of a rejection about 1600 range, and then it will be a little bit sideways. That's what I think. As long as it held this area, I think we are now in a bullish play. Anyways, I think that I was able to answer your questions, that you guys probably have questions or concern in our group. So, I just wanted to make sure that I let you guys know what my feelings are and what my concerns for the stock market. Having said that, smart people take advantage of the situation. Prepare yourself. If the stock market moves to the down, you probably want to take advantage of the situation rather than selling it cheap. Just like how Bitcoin is right now, 25-30% low. Many people believe that I should sell right now and buy it when it goes down. Nobody knows 100%. We have to make a smart decisions. I do dollar cost average in when I'm in cash. If I see some company going cheap, I buy in different phase of time, and in a small position. Let's say if I want to take a 10% position in some in my portfolio in some stock or in crypto, what I do is that I buy 2%, 3% or to 4% in one time, and then 3-4% again, and then 2-3% at the very next in the next 4 or 5 weeks. So it gives me a room. And sometimes what happens is that when most of us have mindset that we don't get to learn about the company or the corporation unless we invest in it. So once you put your initial investment in there, it gives you some sort of feeling that I need to learn. So even you just have invested 3%, so that's not a huge investment. So when you started learning, you get to know and build trust over that company as well. And that's how many people make money. So just like, that's how I do it. I think it's a very good, strategy. Is working well for me. To each his own. Make your own decision, be smart. All these conversation, just take it as a knowledge base and information. It's not a financial advice. Do what you feel like doing. Just be smart out there. All right, thank you very much. Hope you have a nice week ahead, and make